Good evening, master traders and money magnets. It's your Uncle Charters here. And as you guys can see, the SPY closed just a little bit, but it didn't really clear or break down any critical levels. No support, no resistance was lost or gained. Unfortunately, it's just chopped despite having CPI this morning. Uncle Charles was expecting a nice move either to the upside or to the downside. You can look at the 15-minute chart. Did we had some scalpable moves, some level to level moves intraday? In my opinion, yes. I was able to catch a couple myself, but overall it was not beginner friendly. It was very trappy and didn't really go anywhere. Volatility is pretty low. This is unfortunate, but I tell you this, it can't be low volatility forever. Eventually, the market is either gonna drop or pop, and it won't stop for a little bit. Right now, it's gathering strength, trying to figure out what it wants to do next. And the answer will come to us at the right time. We just gotta trust the price action to reveal it to us. And I believe once we cleared that 603 level, I mean, technically we've had 2 touches of it, of that area already. We tried to gap above it, but it didn't hold that support. So technically we had a couple of days of activity there. But if bulls can officially clear, at least on the daily chart, at least on the 4-hour chart, preferably the daily chart, close above that 603 level, then we can continue upward. We can continue the stairways upward. Now, that's usually what happens when we're on a stairway up, okay, guys? Volatility tends to be low. Trading tends to be boring. And volatility is low. We tend to be trappy with the false breakout and the false breakdown setups. You got to be really skilled to be able to catch those moves. But eventually, it's going to make a move and it's going to have strength. Usually when we're on a stairway up, the elevator down comes. No signs of an elevator down just yet. Looking at the volume bar, we did get an increase in volume. So we are still taking steps in the right direction, but we're just not there yet. And I tell you, if we can clear 603, then definitely more upside incoming. But at this point, that 600.4 level has been tested multiple times. That 599 level has been tested multiple times. If the bulls don't eventually show strength, those levels are going to cave in. And with the volume increasing, there's people anxious for a move right now. So if we lose those levels, it's going to get real bearish for the SPY. Loss of 600.4 and 599 would definitely be extremely bearish, especially with this trend line sloping up. So I tell you this, guys, I know volatility is low right now. As long as volatility is low, we're likely going to get a bunch of trappy moves where the bulls and the bears get trapped and get caught up. So my recommendation is know the levels and trade with the traps until we break out or break down to the next trend move. So as usual, Uncle Charters say, trust in the price action and allow it to unfold level to level style. Volatility is low, so you want to trade with the traps, level to level, scalp it, whatever you got to do. And use runners for potential home run moves. You never know when the volatility is going to return and we get that trend move. So like I said, one more time, above 603, we're going to get a trend move to the upside. Below 600.4 and 599, we should get a trend move to the downside. We cannot chop forever, but that is the chop range that I have. Anything in between, like I said, scalp move, level to level it. But once we break that range, trust in the price action and just follow it. QQQ still bouncing off that 5 DMA. We managed though to get a pullback. We cleared the 533 level yesterday. We closed below it. So bears are showing some signs of strength, but can they show a follow through tomorrow? Because if they break down 533 and 531.7, we would officially break down this multi-month trend line that QQQ have. Look to short if we break it down. If we gap below those levels, that'd be a bearish breakaway gap to the downside as well. Either way, 531.7, 530, 528.5, and 527 are the levels you want to watch. If we lose those levels, whether it's a traditional breakdown or a gap down, breakaway gap down, that would be bearish. If we are to trust the bounce from the 5 DMA, if we are to trust the bounce from this multi-month trend line, because we officially tested it today, we want to look to long if 535 and 536.7 clears. 536.7 fib level held today as resistance, but if it clears, we're likely headed to 540 plus. Here is Tesla. The upside continues. The upside continued. We managed to recapture the megaphone pattern yesterday. Gapped up, but look at that. Red candle. And yeah, I mean, yesterday's close was at 326-ish. Today's close was right around 326-ish. So in my opinion, this is kind of looking like a bearish counterattack. I want you guys to Google bearish counterattack. This is looking like that. So if it is a bearish counterattack and it's successful, the 326 level is the level you want to watch. Because if that level fails tomorrow, that would be extremely bearish. The bearish counterattack pattern is playing out with 322, 320.5, 319 or lower in play. I would switch back to bearish below 320.5, possibly for the gap fill. Now, if we stay above 326, then the bearish setup does not play out. 328 and 330 and 331.6, which is the fib level, must clear. And if it does, we are heading up higher Superman style. NVDA still also bouncing off that 5 DMA as well as my fib level. Still no breakdown of a critical level. I did have a trend line here. Add it right there. Change the color to yellow. Possibly see if we can get a third test of it. And if we are to get a third test, 142.5 and 141.5 must fail. That will send us down to 140. And below 140 is when Unco charters would be bear bias, because that would be a breakdown of that trend line. If we are to get a bounce from anything, because we've been bouncing off the 5 DMA, but to show bullish follow through, 144 must clear. We almost did it today, but it failed as support intraday. But if we can do it tomorrow, 145.6, 147, 150 plus in play. Now, usually I would cover VIX and coin, but I like GS. This is from one of my members today, Wisdom. Shout out to Wisdom. He mentioned GS. It was showing signs of life today. Holy moly, donut shop. Well, I do have support at 624, 622, and 620.79.7. If you guys want to look to short, those are the support levels that I recommend watching for a breakdown, because if we break down those levels, 624, 622, 620.7, I would be bearish in favor of pullback, possibly 15, 20 to $30 move back to the downside. But overall, I am bullish above 620.7. Next resistant is at 626, 628, and 629.8. If those levels clear, we are definitely heading up higher, up to 634, 635.4, 638, and 640. All would be my targets to the upside. I like this. GS, Goldman Sachs, and then there's coin. I like coin. Still within the descending triangle pattern. You guys can see it is rejecting. The critical support for tomorrow is 250, 248, 246.7. If those levels fail, there's a high chance we go and hit 239. And 239 has been tested multiple times. It's looking weaker, guys. So if we get that breakdown, that will be a breakdown of the descending triangle pattern. Extremely bearish. I will trust no bounce unless 254, 256, and 257.5 all recapture to send us back up to 263 and 264.8. Once again, above 264.8 is when the head and shoulder pattern, in my opinion, would be invalidated, because right now it's still in play. We just need the breakdown of the neckline at 239. Guys, that is my video for today. Uncle Charters love you, and remember, you guys are money magnets. Bye.